Hello, everyone. This is Tiffany V, CPA and owner of Sense Savvy Tax Resolution, here with another quick training on all things tax resolution. So today we're talking about, excuse me, tax resolution options. Which one is right for you, right? So you understand that you definitely at this point, excuse me, tax resolution is necessary. So now it's just a point of which one. So let's look into this. So first, the importance, right? Why do we want to go down the path of tax resolution if we owe significant balances in back tax debt? First, it stops the IRS collections, okay? We don't want to be on the IRS's radar, all right? When you receive a letter from the IRS stating, okay, Tiffany, you owe us $25,000. It's due in 14 days. You are on their radar, okay? They have you clocked, okay? So we want to stop the IRS collections. We want to get out of the IRS spotlight and move on, right? So it stops those collections. It stops those letters. Next, removing penalties and interest. So there are opportunities to get those penalties and interest on the principal balance you owe removed, which can significantly help reduce that balance, because a lot of times the penalties and the interest are what are growing that tax balance so quickly, right? You may have only owed $2,500 in 2020, but now, many years later, that $2,500 has turned into $7,500 because of the daily accruing of interest and penalties, okay? So we want to get those removed to bring us down to a reasonable tax bill that we can manage, right? And then finally, getting a fresh financial start. We just want this to be over with. We don't want this to carry with us into the future. We want to make sure that in the future, we're doing some long-term tax planning so that we do not end up in this situation again. So it is really important to go down the path and journey of tax resolution to handle what has happened in the past and to not have it repeat in the future. So we are going to talk about all of the options. I offer professional tax resolution, and this is what I do and go over with my clients on. These are the options. There aren't any, and I know on TV they make it sound glamorous about like we can get your tax bill down to, $1,000. If you've owed $50,000, now you only pay $1,000, and yeah. So here's what it is. Every client has a different tax scenario and a different situation. And there are some situations where that might happen, but that is the exception, not the rule, okay? And of course, on the commercials, they want to incentivize you to take action and to reach out to them with the hope of, oh, maybe I only get to pay back $100 even though I owed $50,000. Likely not, but anyway, I digress. Here are the options for you. So installment agreement. This is probably the most popular option of tax resolution. So this is where you take your tax bill and you break it up into monthly payments, either based on income, which is the best route, or if you're doing it yourself and you're working directly with the IRS, they're just going to try to get you into what is a standard or streamlined payment plan, where they just take the balance, divide it up into a certain number of payments, and that's what you pay. But you really want to have a monthly payment based on your income, not on that streamline. So again, a professional performing tax resolution services can help you with that even more than kind of you trying to do that on your own. That process looks a little different. So installment agreements, most popular, and we are breaking up your tax bill over many months to make it, a straightforward, ratable payback over time. Now, in that, I do also want to say that even though you're on a payment plan, the IRS is still accruing interest, through all the way through until you're paid off. So if you can, making a little bit more in payments will help reduce that interest that is being calculated and accrued. But please believe the IRS, just because you make the installment agreement does not mean they stop with interest. That is going to continue. Think of it like a credit card bill. You're going to be charged interest on the balance until you've paid it off in full. Okay. Then we've got an offering compromise. So this is where you're settling for a lower amount and you're doing that in more of a lump sum situation. So let's say you owe $50,000. You can offer to the IRS, okay, I will pay you today $37,000 to make this go away. So you can get kind of that instant savings on that, right? Sometimes in an offer in compromise, you can have a couple of payments like broken up, but typically it has to start with like a large lump sum, and then maybe over the next couple of months you can, pay the rest or whatever you've agreed to. So this situation is more, think of like when you're buying a home and you submit an offer to the seller of the house. It can be a little bit of back and forth, right? Like I'm submitting an offer to the IRS. Are they going to take it? Yes or no? If they do, great. That means within a very short period of time, they're going to take that money because we've agreed on that. If they reject the offer, we go back to the drawing board and renegotiate the offer, resubmit. So this can be, obviously this is a lot more involved than an installment agreement can be. And it can take a lot more time because it's the back and forth. And offering compromises, I've had clients where we've done offering compromises and it has taken, 6 to 9 months to get to an agreement. Okay. So another option for resolution, but like I said, this one's a little more involved. The next one is currently not collectible. So this is where you have to show and prove that you are in such a financial hardship that there is absolutely no way for you right now to make the payment on that outstanding tax debt. So what the IRS does is they pause the collection if you are struggling financially. Now, remember, this is not a forever pause. This is a temporary pause. And they will be assessing your financial situation at every, I would say every 6 to 12 months. It could be more often than that, but they are going to reach back out and, it's temporary. Temporarily, they'll say, okay, it's, let's say it's January and you get into a currently not collectible. You might hear from them again, midway through the year, right? And seeing if that's still the case. So it does give you time to kind of get your finances in order before they will begin trying to collect on that debt again. Then we've got penalty abatement. So penalty abatement means to remove the penalties on your balance. So there are a couple of options for penalty abatement. There's first time abatement, which is just based on a clean tax history, meaning you have filed all your tax returns on time, you've never been late, and the IRS will do a first time abatement, which is just taking off certain penalties immediately. Then there's a reasonable cause abatement. And this is more of, okay, were you dealing with medical issues? Were you dealing with a financial hardship that stopped you from making the payment or agreeing to a payment plan for your back taxes? Like there was some reason why you were not able to make the payments on your tax bill at the time that the tax was calculated. A little bit of a higher hurdle to get over because you have to explain the situation, and then the IRS will review that situation and determine, are they going to kind of give you this kind of goodwill, good faith removal of penalty. And then finally, innocent spouse relief. So this is where it protects your spouse from, a tax debt. So if you had significant federal tax debt and every time you guys do your tax return, they take, if you are getting a refund, they take, excuse me, your refund. What this does is really separates from a tax perspective, your finances from your spouse, so that if the spouse was supposed to be getting a refund for their income part on your return, that is protected. So just to give an example, if you're filing a joint return and spouse A, and let's say you're getting a $10,000, this is $10,000 refund, just as the example. If you're getting a $10,000 refund, but let's say spouse A, 5,000 of that refund is related to their income, and spouse B, the other 5,000 is related to. Innocent spouse relief would basically say, okay, if I'm spouse B and the debt has nothing to do with me, I get to get my 5,000. They're not going to take it just because I'm married to my spouse, spouse A. So it would protect their assets and their money from that debt collection effort. So typically in this case, I will send these, or I will, for my clients, I will send the innocent spouse relief forms as a part of the tax preparation so that it's on file for any future issues that may happen with any tax debt. Okay, just to separate and make sure that that spouse is protected financially. Okay? So these are the options, right? So again, if any tax professional tells you, something outside of this, just know you need to take that with a grain of salt, maybe step back for a moment, because these are the options for every taxpayer. These are your options right here. So how to choose which is the best option. So it is going to, be based off of many factors, right? Consider your income, right? How much discretionary income, so income you have left over after paying all of your required bills, do you have to put monthly towards this tax debt, right? Versus the debt amount, right? How much, do you owe? Is there an opportunity to do an offering compromise, right? To pay it off in full? Or do I need to break this up to make sure that I can reasonably pay it over time? Are you facing a financial hardship? If you are, that would potentially put you into different resolution options. And then finally, what IRS programs do you currently qualify for? And making sure that you are in compliance so that you can qualify for the best option for you, whether that be a payment arrangement, payment plan, whether that be offering compromise or penalty abatement. So common pitfalls. Please explore all the options before applying, right? You want to make sure that you're getting into the best option for you, because you may qualify for many different options. So you have to look at them all and decide, okay, what is best for me right now? Giving incorrect information to the IRS is a no-no, okay? Make sure that you are providing them proper information, because not only can it delay the process, right? And they say, oh, we rejected this because this doesn't make sense. Try again. They may just flat out say no. And now we're moving into a levy lien situation. And we do not want that. Don't want that life, I'm telling you. And then missing deadlines and paperwork. And this is more in the future, right? Every year tax season comes around, right? Making sure that you are not missing deadlines, because that is what's going to start this chain reaction of increased tax debt, and that back tax debt. So making sure that you do not miss deadlines, you're filling out all of the paperwork, you're submitting the information on time to the IRS. So your next steps, right? So again, just to summarize everything we talked about today: identifying which resolution program fits your situation, gathering financial documents and IRS notices, because that's going to help you determine what you can do, what that balance is, how it relates to your current financial situation, and then taking action before the IRS collection efforts get worse. We would much rather deal with working with the IRS where they're still offering us a payment plan versus when they send you a letter saying we are levying your bank accounts. We don't want to do that. So thank you so much for joining the training. And if you do have any, questions or are looking for one-on-one support where you and I are working together to resolve, and I am representing you in front of the IRS, I would absolutely love the honor and pleasure to work with you to help you resolve this debt as quickly as possible. So with that, I look forward to hearing from you, working with you, but I do ultimately hope this resource was helpful in you understanding the process and what options are available to you. And with that, I will see you on the next video. Thank you.